All right, traders from around the world, we have a really intriguing video for you, and it's called Should You Be a Day Trader or Should You Be a Swing Trader? We're going to talk about the pros and cons of both. Let's start off with day trading.
All right, so I love day trading. Let's talk about some pros and cons of day trading. Number one, pro, you are always in cash at the end of the day. So the Trump tweets, the overnight gaps, whether it's, lately with some of the Nikola stuff that's been going on out there, interesting news stories, you don't have to worry about that. By the end of the day, you're done. You're out of the trade. You're on to the next thing. The other number two is 4-to-1 margin. So even if you have a $30,000 account with 4-to-1 margin, you can take positions with up to $120,000 in size. Again, it depends on your broker. It also depends on what country you're in. So this is some US specific information. It's also, number three, a fantastic way to create consistent cash flow. Because if you do, let's say just in a quick example, you got a $30,000 account. You day trade throughout the month, you're at 33,000 at the end of the month, you pull the 3,000 out, that's your bill paying money, you got $30,000 left, and you do it all over again the next month. Number four, we're on four, is it's exciting, it's fun, especially when you're in and out really quick. I mean, there's nothing wrong with clicking a few buttons, pulling out a couple $100 out of thin air, literally by just tapping some numbers on the keypad and clicking the enter button, playing around with your mouse a little bit. So that's very, very exciting. It can be very, very fun. And again, just less time in and out of the market means that you're not susceptible to a lot of those different things like we talked about earlier. However, it cuts both ways. There's some cons with day trading as well. It's very easy to over leverage if your risk isn't managed, because that $120,000, again, that's if I have a $30,000 account, that's not my money to trade with. That's the broker's money. And so if I over leverage myself, I have the ability to be margin called. They can automatically close my positions at the end of the day if I forget to put a time to exit, or if I forget to use a stop or a limit target to get out of a trade. I can be over leveraged that way. It often leads to over trading. I think that's one of the most consistent things that I see with traders, like day traders, is that they think, well, I'm a day trader. I got to be trading all the time. I got to be in and out, in and out, in and out. And that's not necessarily the case. Oftentimes, less is more. It can be more stressful because there are some violent whipsaws, especially on the open, or if you are in a trade when there's certain news things that come out, like the Fed. If Jay Powell takes the mic, there's definitely going to be some whipsaw, the Jay Powell plunge, as we like to call it. So it definitely can be a little more stressful. It takes more time in front of the computer because you do a lot of waiting. I picture it like a sniper, and you're waiting for your particular setup. And when it comes, bam, you take that shot and that's your trade. But you could end up having, like the other day, I think I had to wait 5 hours before I had a setup. And once it came, I was in and out of that trade within about 15 or 20 minutes. But again, I had to spend 5 hours sitting in front of the computer. So that can take up a little bit more time. You also have pattern day trading risks. So depending on your account size, if you're under 25,000 in the United States, you're limited to a certain number of trades, which is, a really dumb rule. I don't know why they have that out there. I think that actually causes people to lose more money, but that's a story for a different video. And the other thing is it's harder. There's more setups, there's more strategies. And so there's a much bigger learning curve out there versus swing trading, which Jeremy's going to talk about right now.
Yep. And here's the great part about this. Most people don't actually know what swing trading is. So if I go to a Christmas party or Thanksgiving party or a friend's birthday party and people say, hey, what do you do? I normally just say day trader. If I say I'm a swing trader, people look at me a little bit weird. Like, what is swing trading?
You're a swinger? What?
Yeah, what? Yes or no? So swing trading generally is having a position for multiple days, sometimes weeks, and sometimes months. Not necessarily years, but it can be if you really need to be. But swing trading is getting into trades and having a longer time frame. And there's obviously pros and cons that go with that. In my opinion, most traders should start off with swing trading because one of the pros of swing trading is it is easier. All right. So that's one of the pros is it's simply easier than day trading. Day trading is harder. Most people know what day trading is. They like the allure of day trading. They try to carve out money by day trading because, like my boy said, it is a better way to create consistent cash flow. But the reason that you can create consistent cash flow is because it's every single day. You have the ability to stack your gains. Swing trading, you're to the mercy of the market. So it might not be the best market for swing trading. Sometimes you're gonna have to wait 3, 4, 5 months. Bills come due every 30 days. All right,
Yeah.
At least mine.
Yeah, mine too.
So if you're swing trading and you have less than a 30-day window to pay your bills, then day trading sometimes can be a little bit more alluring, right? So just kind of something to keep in mind. Now, some more pros on swing trading. It takes less time. I mean, you can realistically do extremely well with 2 hours a week on swing trading. Sit down, look at charts, look at trades, and put your orders and walk away. I mean, who doesn't have 2 hours a week? Every single person watching this video has at least 2 hours a week. It's not hard. And of course, then you have less stress because you're not really worried about it as much. Day trading, you're there, you're sweating, your palms are sweating, your heart's beating, you're terrified, mortified, petrified. And with swing trading, a lot of times you're buying stocks and you're buying positions that you like. You're investing in companies that you understand. You're taking positions in stocks that you know how they make money. And you're just relaxing, letting them do their thing and letting them pay you, okay? Now, that gives you more time with friends. That gives you more time with family, right? Less stress, less time spent. It's really, really effective for my newer traders. But there are absolutely some cons with swing trading, okay? So you do have overnight risks, all right? So let's say that my man over here starts coughing on me and boom, I get COVID-19, okay? And the whole world turns into a pandemic and overnight the market drops 35%. Not great for swing traders unless, of course, you know how to short. So when it comes to swing trading, you do and you are susceptible to those things, which are challenging. Also, delayed gratification goes out the window. With day trading, you can find out within minutes if you're right or not. You can get paid within minutes, okay? You can make a lot of money very, very quickly with day trading, which again is a pro and a con if your brain's wired that way and that's what you're expecting all the time. So swing trading, delayed gratification, and it takes longer to make money. Oh no!
So long. I gotta wait a whole week or two.
Oh no, 2 weeks to make money. This sucks. So yeah, something to keep in mind is that is a con. I know it sounds crazy, but it is. Another big factor is I've never in my entire life been margin called for my day trading because I'm in and out and I'm taking my money and I'm moving on that day. But I have been very close recently on swing trade margin calls. But in my past, when I was an absolute horrific trader 11 years ago, I did all kinds of stupid stuff and blew out all kinds of accounts through simply over leveraging margin. So that is something that's absolutely possible in your swing trading. You over leverage, you get margin called, and you're just out of the game. And we absolutely want you to avoid that. Okay. So there are a lot of pros and cons to both of these aspects of trading. And ironically enough, we do both. We do both very well. We enjoy both. And there's a phenomenal time and opportunity for both because if you can properly manage day trading and swing trading, you can, over the course of every single month, consistently generate income because there's some markets, there's some cycles in the market where day trading is phenomenal and swing trading sucks face. And then there's sometimes where swing trading is the easiest thing you could possibly do, and you're an idiot if you're
And day trading is just terrible.
So make sure to figure out which time is best for you. Another thing that comes down to sometimes is capital, as he mentioned. If you do have less than $25,000, you should probably be swing trading because it's easier and it gives you the ability to learn. So the point of this whole video is, in my opinion, if you are newer at trading, you should probably start with swing trading. Take some positions, learn what buttons do what, learn how to hold a position, learn how to be in stocks, learn how to scan. Take your money, put them in some nice stocks at good prices, hold them for a while, and use those skills to perfect your. So that's our video. That's our message. Thank you so much for watching. He's Robert Falco. I'm Jeremy Alexander Newsome, and this is a Real Life Trading production. Thank you for watching, and until next time.
Love life, live life, trade it. Don't forget, like, comment below, hit that subscribe and notification bell.
Rock.
Take it easy, team.